All right. Hello, everyone. My name is Andy Flury. I'm founder and CEO at AlgoTrader. Here with me today is Jonathan Dakin. He is VP Strategic Accounts at Fireblocks.
Good afternoon.
So yes, we're going to talk about what does a bank need to offer crypto custody and crypto trading to its clients. We heard a lot about regulation today and things that are far in the future, but what we're going to present here today is real. We're going to give you some real life examples and suggestions, and what does a bank need to get started with this. But let's start with a quick introduction about our two companies. So AlgoTrader is a Switzerland-based fintech software company. With our product Wireswarm, we provide an order and execution management system for both traditional assets and digital assets. So we integrate with many of the liquidity venues and support trading of all these assets. We're based in Zurich, but we have offices in Singapore and New York. We're a typical fintech startup. We're backed by investors like Credit Suisse, Blockchain Ventures, Investire, and New Capital. What you see here, so this is our product. This is the main UI. It's a browser-based applications, and it basically shows you, everything a professional trader need, like charting, order handling, market data, transactions, and so forth.
So good afternoon. I'm Jonathan Dakin from Fireblocks, and we're a security technology company that's used by. These figures are slightly out, about 120 customers globally. And they use Fireblocks to transfer about $22 billion worth of digital assets between each other every month. So that's companies like Revolut and Celsius, some of the most scaled organizations in the digital asset world. And they use Fireblocks to issue, transfer, and settle digital assets across the entire market. And the sort of use cases that they use Fireblocks for are everything between trading, which I hope we can bring to life today, but custody, lending, and electronic securities, across the market. Glad I pressed the right button there. And so our platform works via API, so you can do that completely in an automated way, but this is the UI view that you will see when you turn on Fireblocks. And on the left-hand side is your governance layer with all the policies. In the middle, treasury management for over 300 types of token and 18 protocols. And crucially, on the right-hand side, and this is what we've come here to talk to you about today, is the delivery of those assets. So we have a network of over 120 participants that are trading between each other using Fireblocks to deliver and settle those assets live in an immediate basis.
So let's get started with the main topic. So why would a bank want to offer cryptos to their client? Basically, what's the business case for a bank? What you see here, it's a collection of some very good reasons. First of all, the bank can expand its client base and its services with this new, that we all know, highly uncorrelated asset class. It's a new source of revenue stream for the bank, which is, basically independent of classical capital markets. And actually, for a bank to start with cryptocurrencies is a very good exercise to prepare them for the future when finally security tokens will come to life and will become tradable on secondary markets. As you all know, many people hold cryptos today, especially the young generation. And let's be honest, banks have always been specialized in safekeeping assets for their clients. So for a bank, it's actually very natural to also offer custody for these new digital type of assets. And last but not least, a bank can also brush up its image on the market and foster the image of a new innovative bank.
So this is exactly what we see in the market. This is a massive opportunity for the banks to add services around a new asset type. And that's what's really crucial for them. And first of all, they go out into the market and they look for custody. But where Fireblocks comes in is not only the custody side of things, but how do you build out the services that are actually going to enable you to monetize that custody? And we're actually doing a presentation on this tomorrow. But what the banks really need is that ability to use custody, integrate that into their core systems, and their governance and processes, things like KYT and AML, but then bring out for services for trading, lending, and what have you. And you can see that amongst some of our customers. You have people like Celsius who've got, I don't know how many wallets we'll find out they've got tomorrow, but about 1 million wallets. But they've originated at the beginning of this year about $6 billion worth of loan origination. So it's a very exciting market if you get it right. But it's about finding, and I've heard this a lot today, financial infrastructure to make this happen. And that's what I think we can talk about today.
So let's look at it a bit more in detail. So what are the actual components a bank would need to build such an offering? So besides the core banking system the bank already has, bank will need a solution for custody and storage of private keys. Then they will need something for treasury and liquidity management. So basically to transfer assets to and from custody to the external venues. And actually Fireblocks here, they got both. They got custody and the transfer, and it's one of the best solutions out there. And then last but not least, the bank will need a solution for trading and execution and connectivity to all these venues. And that's what we do at Wireswarm.
And if you look at those venues that Andy just had up there, we connect all of them, whether it's exchanges like Bitstamp or source of liquidity like B2C2. They're all working on the Fireblocks network. But what do you actually need for a successful asset transfer network? Well, first of all, you need participants in it, right? And we've got that. Whether you need our 120 customers, or you build your own sort of private network using Fireblocks to do that. And the idea is that actually throughout your whole delivery process, that's insured. And also that it's protected in the traditional cyber and hacking way. From operationally, it makes it very easy to deliver your assets, but also they're protected from a security perspective. But what else do you need on a network? You actually need to be smart about the way you deliver things like DVP and PVP. And can you settle in fiat as well as in digital assets? And these are the features that the Fireblocks network delivers for you. So if you're trading with organizations, you can actually, instead of having to pre-fund all the exchanges that you're working on and all your counterparties and connect to a source of liquidity, it's already done for you. So you can deliver your asset immediately to the counterparties that you need to trade and settle with.
So how can you actually access crypto liquidity? And to be honest, that's not that simple. Main reason is the fragmentation of the crypto landscape. You can basically look at the crypto landscape as a huge network of liquidity producers, so that's the exchanges, and liquidity consumers. Unfortunately, many of the players don't actually disclose their true source of liquidity. So for a bank to achieve best price executions for their clients, the bank will need to tap into this network at multiple places and compare prices before sending an order. Unfortunately, this connectivity is not easy as well. The bank would have to build, maintain, operate connections to many of the venues out there. And in addition, they would need to build and operate an order and execution management system. Unfortunately, there are no common standards in the crypto space. Every exchange, every venue has a different API, a different protocol. So this is where we come in with our solution, Wireswarm. We provide a single unified fixed API to the most liquid and most regulated venues out there. And as some of you might know, fix is actually a standard that most banks know very well. Let's dive a bit deeper and compare the different types of venues out there. There's actually a lot of confusion around this topic. Let's start with exchanges first. All exchanges require you to pre-fund the account before you can trade. And that's a big problem for most banks because of counterparty risk. Luckily here, Fireblocks with their instant transfers allow you to transfer funds immediately to the exchange right before you place an order. And that limits counterparty risk tremendously. Some exchanges do offer credit lines, but they're very hesitant with that. You need a long-standing relationship with the exchange to get into those credit lines. Fees have dropped quite a bit, so typically they're in the range of 0 to 0.25%. Some exchanges like Coinbase also offer OTC trading, so they have an OTC desk. And one thing a bank has to be specifically careful with is the fiat transfer, the fiat settlement, as international transfers through the SWIFT network can take days. Next up, brokers. So brokers don't require you to pre-fund the account, so you can trade a broker on a post-trade settlement basis. Most brokers offer both agency and principal trading. On the cost side, there's quite a bit of a difference. Typically, they're in the range of 0.5 to 2%. It actually says 1.5 to 2%. That's actually the Swiss brokers. They're in that range, but internationally, we're a bit lower. Bitcoin Swiss, as you might know, a big player from Switzerland, they're probably one of the largest brokers globally. They process about a billion per month. Also something to consider is APIs provided by brokers are quite new and not as reliable and as mature as some of the other vendors. Last is market makers and OTC desks. They also support post-trade settlement on a DVP basis. And again, most of these market makers are integrated with the Fireblocks network, which simplifies settlement tremendously. Fees are typically also pretty low. They're, typically the cost is included in the spread and is below 10 basis points. Last thing I want to mention from my side is the difference between BestX and OTC trading. This is something to consider as well. With BestX, you basically use components like execution algos to split up large orders in combination with smart order routers to automatically pick the best venue for you. With RFQ, you send requests to multiple venues to provide you with a quote to buy an asset, and then you can basically compare the quotes. We with our product, we actually support sending out RFQs automatically and select the best quote also automatically. So the difference is that with RFQ, you know beforehand what you're going to pay. Unfortunately, this uncertainty comes at a cost. The market maker will price that into the spread. So if you're in a hurry, use RFQ. Otherwise, our recommendation is to use Best X. It'll be cheaper in the long run.
So I'm relying on you to press the buttons. It's very unfair of me. So I just want to talk to you a bit about the evolution of custody. Okay, so and I think some of this is fairly obvious, but especially around the trading perspective. What's the most secure thing, right? It's cold storage because it's completely air gapped. It's not connected to anything, and that's fine. But in a trading world, you literally can't take a position on a particular trade that you want to make if it's going to take you 24 hours to get your asset out of custody. So people started working with multi-sig, which is great and secure, but actually not very operationally efficient. So if I get somebody new into my operations team, I have to go and rebuild my wallet infrastructure and change the addresses. That's very difficult. And also, you're paying for everything because it's actually happening on the blockchain. Right, so you set up a new wallet, it's going to cost you very costly. So we've seen multi-party computation, MPC, really come to the forefront, which is something that we do. But actually, if you look at MPC itself, it's actually not a particular silver bullet because actually it can be very quick, but actually you still have to secure that in hardware. You've got custody, and that's great. But actually, how do you deliver and settle those assets out to the market that you work with, and how do you do that instantly? And you're still in this business of, I have to somehow find a way of getting my funds onto whatever exchange or venue you're using, and how do I settle that? And all these things for you to build. How do I secure that in hardware? Well, I've got to buy a HSM. That's small things that I want to build. So Fireblocks is a little bit different. We lead the way in that, we think. So we've introduced a new MPC algorithm, MPC CMP, which is our own algorithm, but we've given it to the entire market and open sourced it, so anybody can use it. It's secured in very scalable hardware of Intel SGX. But the crucial thing that I think in this discussion is actually we have that network that gets the funds that you're trading and the assets that you're trading out to the trading venues and settling with those trading venues. And that's the real unique with Fireblocks. So I just want to talk you through a quick sort of banking or NeoBanking customer scenario that we've recently implemented for a small company called Revolut that you may or may not have heard of. And I think this is kind of crucial in the stack. What do you need to be successful with digital assets generally as a bank? So first of all, we've provided treasury management around very secure wallet infrastructure. I think I've only got 1 minute to go. That basically supports all the blockchain protocols that the bank is going to use and can be integrated via API to automate many of the processes that bank have. Not just from a point of view of automating the delivery and DVP out to the venues they're working with, but also working with core banking, AML, KYC, and actually having the transaction control to do things around the movements that you're making. So for instance, if your KYC picks up that there's a problem with an incoming or outgoing delivery of assets, then that can be frozen. And finally, how do you actually get the assets out to the counterparties that you're working with? But also, there's a retail flow here. So how do I connect and allow Mr. and Mrs. Smith to withdraw and deposit digital assets as well? So all of these sort of flows are incorporated into the platform and enable the business workflows that make the bank money. And finally, what I want to talk about is what goes on top of it. We're going to get. I'm too quick.
No, your time is actually up.
Okay, that's fine. You're going to shut me off, right? Okay, so I think what we're going to summarize and say is this is available to you right now. Okay, you can take advantage of this And both systems are available straight away for you to work with, instead of actually having to build the building blocks yourselves.